Big news today, the financial world is buzzing again. This time, it is about Ethereum exchange-traded funds. Yes, Ethereum may be following in the footsteps of Bitcoin, and this could be a game-changer. Bitcoin exchange-traded funds opened the floodgates for institutional money. Billions of dollars poured in Bitcoin was no longer just a digital asset, it became a mainstream financial product. Now, everyone is asking the big question, will Ethereum exchange-traded funds have the same impact, or maybe even bigger? Because Ethereum is not just a cryptocurrency, it is a platform. It powers decentralized finance, non-fungible tokens, and smart contracts. Its use cases go far beyond digital gold. That is why many analysts believe Ethereum exchange-traded funds could bring a new wave of adoption. Think about it. An exchange-traded fund makes Ethereum easy to buy. No need for wallets, private keys, or exchanges, just a ticker symbol on your brokerage account. This simplicity attracts investors, especially the traditional ones, pension funds, retirement accounts, and hedge funds. The same way they entered Bitcoin through exchange-traded funds, they could soon enter Ethereum, and here is why this matters. Ethereum has a unique value proposition while Bitcoin is digital gold. Ethereum is digital infrastructure. It is the backbone of decentralized applications. It is the settlement layer of decentralized finance. It is the foundation of tokenization. From art to real estate, assets are being built on Ethereum. So an exchange-traded fund would not just represent a coin, it would represent an entire ecosystem. And that excites Wall Street because it is not just about speculation anymore, it is about future financial infrastructure. The United States Securities and Exchange Commission approved Bitcoin exchange-traded funds after years of delay. Now the focus has shifted to Ethereum. Applications have already been submitted by big players, names like BlackRock, Fidelity, and VanEck. They all want to launch Ethereum exchange-traded funds. These giants do not move without reason. They see demand, and where there is demand, there is money. If the United States Securities and Exchange Commission approves Ethereum exchange-traded funds, we could see billions flow in within weeks, just like it happened with Bitcoin, and the price impact could be huge. Some analysts predict Ethereum could rally strongly because institutional investors bring long-term capital, not just traders looking for quick profits. But let us be clear, it is not guaranteed. The Securities and Exchange Commission is cautious. They want to make sure Ethereum is not considered a security. That is still a debate, but many experts believe approval is likely. The momentum is too strong. The pressure from institutions is too big, and investors are ready. Imagine your retirement account holding Ethereum exchange-traded funds. Imagine banks offering Ethereum-backed products. Imagine Wall Street analysts covering Ethereum daily. This is the kind of mainstream shift we are talking about. Ethereum would no longer be just crypto. It would be finance, it would be technology, it would be infrastructure, and the global narrative would change. Bitcoin may have led the way with exchange-traded funds, but Ethereum could expand the game. Because it brings more than store of value, it brings utility, it brings programmability, it brings innovation. So the question is not just will Ethereum exchange-traded funds change the game. The question is, how big will the change be? Some say Ethereum exchange-traded funds will trigger the next bull run. Others say they will cement crypto as a permanent asset class. Whatever happens, one thing is clear, Ethereum exchange-traded funds will not just be another product, they will be a milestone, a turning point in finance where blockchain meets Wall Street in full force, and the future of money takes another big leap forward. So keep your eyes on the news, because when the first Ethereum exchange-traded fund is approved, the crypto market may never be the same again.